How do you buy a house in Vancouver? In this video, we're going to talk about beginning to the end, from looking at a house, placing the offer, getting the seller to accept it, and deposits, and going through the bank, and going through a lawyer, and finally getting the key. It's quite a long process, but this is how it's done in Vancouver. So first is you get pre-approval. And what pre-approval is you basically go to the bank or any lender, just find out how much you qualify for. And this is important because you want to know approximately how much of a house you can afford. And that's dependent on a few things. It depends on the income, how much down payment you have, but primarily income and your history of employment. So the bank will tell you, let's just say they can allow you to buy up to $1 million. It's important because, first of all, you know what you're looking for. But let's just say you didn't do that and you went through all these steps to buy a property, place an offer, only to find out that the bank won't lend you money. So that kind of sucks. You kind of have to stop and start from the beginning and work within a range that you can afford. So first is pre-approval. So for the purposes of this video, let's just say you're pre-approved for $1 million. You work with your realtor or you look on MLS yourself and you see a bunch of houses, $1 million, and you see one that you like. You would then contact the selling realtor and say, look, I want to place an offer. You negotiate a bit. So let's just say you go in with an offer of $920,000. Now, in that offer, it's not just the price that you put in, but there's a few terms. One obviously is when you're going to complete. So complete is when the money transfer happens. When you give them the money and it becomes legally in your name, whether that's 2 weeks later or a month later. So you give them $920K, they counter $980, and you go back and forth. And let's just say you end up at $950,000. But it's conditional on a couple of things. It's not really yours yet. You have the option to back out if you put in conditions. So what are these normal conditions? Typically it's conditioned to your inspection of property and also conditioned to final financing from the bank. These are important because let's just say you bring in the inspection and there's a lot of things wrong with the property. Then you have the chance to either back out if there's too many defects, or you can negotiate the price once again to fix those defects if they're detected. And also financing, kind of like a finalization, although you were pre-qualified, but the property in hand, give it to the bank and say, aha, this is the exact property. Like the bank is going to say, I am giving you a loan and it's yours. And usually this is, it can be 7 days or 10 days, but I like to use 10 days. And during these 10 days, you would first have it basically accepted by the bank. And you do that because let's just say you spend money on inspection first, but the bank doesn't finance you. So you would have wasted that inspection fee. The inspection fee can cost anywhere between $600 to $1,000 in Vancouver. So you do those two things. The bank will say, okay, you bring in the inspector, they come in inspection during the daytime. Usually they'll have a report for you by the end of the day. So it's a nice computer format. You can read it. And, if it looks good, there's not too many defects. Or if it does have defects, okay, let's just say part of the inspection, the garage door opener is broken and the cost of that is $1,000. You would then say to the seller, look, I found this inspection, overall it's good, but however, the garage door is broken. And you can kind of suggest, how about you pay for it? And he can say, sure, I'll pay for it, or maybe work out something in between, like he'll either say no, yes, or let's do 50-50. It's really negotiation back and forth. And after that, everybody's happy. Then you would say, okay, I'm going to remove these conditions. Only when it's removed, that's when it's called firm and binding. So that means it's a done deal. Nobody can back out. Full steam ahead, and the property is going to be yours on completion date. Usually on the offer itself, you have a deposit amount of 5%. Going back to that $950,000, so that'd be what, $45K or $47,500. You write a bank draft, give it to the other realtor, and that sits in trust. But that deposit will be used towards the purchase of the property. It's not like it's a fee or anything. After you give that deposit check, you're waiting for the completion date. Let's just say that's a month later. During that time, you would pack your house and get ready for that move-in, book the movers. Also, during that time, you would look for a lawyer or a notary public. And this is because you can't just give cash to the seller. You need like a lawyer or a notary public in between. So you give that lawyer the information, and the lawyer will communicate with your bank, and they will communicate with the seller's lawyer as well. So on that completion date, the lawyers will talk, money transfer will happen, and that happens on completion date. So let's just say that completion date is November 15th. So money transfer on November 15th, usually a day later is possession date. On possession date is when you get your key. So that's the process of what happens when you buy a property.